Good afternoon, everyone. Welcome to the Budget and Finance Committee meeting for the City of Franklin for June the 10th. We will call to order with a roll call vote. Alderman Speedy, are you here?
Yes.
Alderman Shaw, are you here?
Yes.
Alderman Peterson, are you here?
Yes.
And the chair is here. Second item on the agenda is consideration of approval of minutes from the May 13th, 2021 Budget and Finance Committee meeting. Is there a motion?
So moved.
Second.
Proper motion and a second. Alderman Speedy, how do you vote?
Yes.
Alderman Shaw, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
And the chair votes yes. Let's go to item 2, which is consideration of Resolution 2021-91. It's a resolution adopting a revised purchasing policy for City of Franklin, Tennessee, procurement not pertaining to the design and/or construction of new infrastructure and facilities. You're up.
Thank you, Mr. Chairman. My name is Brian Wilcox, and it's my pleasure to serve as the city's purchasing manager. Staff recommends several changes to the purchasing policy for City of Franklin procurements not pertaining to new construction, but none of these are substantive changes. I would classify the changes mostly as clarifications to cross-references within the policy, plus one update to a reference outside the policy. Staff is not aware of any adverse financial impact of these proposed policy changes, and staff recommends that Resolution 2021-91 be recommended to the Board of Mayor and Aldermen for approval. Thank you.
Thank you for that presentation. We'll entertain a motion.
Move for approval to
Prop-
recommend it to the Board of Mayor and Aldermen.
Proper motion, is there a second?
Second.
Any questions from the committee for Brian? If not, Alderman Peterson, how do you vote?
Yes.
Alderman Shaw, how do you vote?
Yes.
Alderman Speedy, how do you vote?
Yes.
And the chair votes yes. Item number 3 is consideration of draft resolution 2021-96, a resolution adopting a lease accounting and reporting policy for the City of Franklin.
Good afternoon, Mr. Chairman. On this item, Finance is requesting a recommendation from the committee to the full board for approval. And a few years ago, about 2017, the Governmental Accounting and Standards Board actually passed this statement that basically let governments know how to account for leases as well as how to report for leases. In the next fiscal year, this policy will actually take effect. It includes leases of land, buildings, vehicles, and equipment. It did exclude a few things. It actually excluded leases of software, as well as leases to own, which we actually had several a few years ago. The purpose of this policy is to take the 96-page statement and condense it into something that can be used as guidance by the city for not only the leases it already currently has, but any leases that it undertakes in the future. In leases, the city may be the lessor, the owner of the asset, or could be the lessee, the one that's paying for the use of the asset. The main takeaway from this statement, and it's only a two-page policy, is actually it's a checklist that can be used to make sure that these are the items included in our lease agreement. And we actually have been putting most of them already into our lease agreements, but there is one that actually was added, and it actually says to include the interest rate. And that seems to make sense, knowing how much is being paid or how much is being charged. And it actually even allows finance to calculate the interest rate if for some reason that interest rate is not included in the agreement. In the 2022, okay, yes.
What interest rate?
Basically, it's almost like a lease being similar to debt. How
Well,
much
but it's
you're
not.
actually
I mean,
paying, and it's
A
the
lease payment
Yeah, on the
is-
lease payment, absolutely.
is just a lease payment.
Yeah,
I mean,
it-
it's
on the
not,
lease
it's not
payment, yeah.
interest, right. So,
The implicit interest rate on the payment.
okay, but then that's totally based upon the value of what you have. So who determines the value? It can't be book value.
Well, it's actually whatever the rate of the lessee is, so essentially that's how it can be calculated.
So then each one of these charge us?
Well, GASB 87 requires a disclosure of if
Oops,
the,
sorry.
if the lease agreement itself states what the implicit interest rate is, then you have to disclose that. However, if the lease agreement does not state it, then there has to be reasonable assumptions made to get to whatever the implicit interest rate was in that agreement. So that's why that when we developed this checklist and worked with our auditors, the best way is before a department while they're considering a lease arrangement, to go ahead and have all of the mechanics laid out to either state what that implicit interest rate is or to make it very clear how we're going to calculate that. But that is a requirement of GASB 87, is to report an implicit interest rate. So of course, if it's a piece of equipment that the book, like you said, a purchase price is a certain amount, it's a little easier to get using the payment, do the calculations and back into what the implicit interest
Well,
rate is.
I was more thinking about if we were the lessor and someone else was a lessee. So if we have a building, as an example, and we decide to lease it to somebody, I don't know how you can, I mean, that's what I do for a living, okay? So I don't know how you don't imply in any, of course, privately, you don't have this issue, so I understand it may be the federal. I don't know how you establish an interest rate, because there actually is no interest. You're just paying rent. And there may not be any basis, the property may have been totally amortized or depreciated, so there's no value to property. And so then are you telling them that everything being paid is all interest? I mean, what, I know it's government, I know it's stuff, that doesn't make, that statement makes no sense to me.
Well, and the requirements of 87 has really, and this is, of course, this has been looming for many years now. We actually was supposed to have already implemented 87, and it was delayed because of the COVID period. So GASB delayed the implementation by another year. But as this GASB statement was going through all the steps that it goes, this is what made people like Mike and myself and Eric really nervous about 87, was because it required disclosures of a lot of information that wasn't found in lease contracts. And we actually shied away from looking at leases, trying to get a grasp with our auditors of how we would ever be able to comply. Because if we're going to have leases that fall under 87, we have to comply with 87.
So they give you guidelines on how to determine what an interest rate might be on something?
It gives, and of course, like Mike said, it's 95 pages.
Oh, yeah.
There's a lot of details to this, but it gives you, if the interest rate's not stated in the lease agreement, it becomes kind of a reasonableness between staff and the auditors to get to what is the disclosed interest rate for that agreement. So it's very complicated. It's very complicated.
Yeah, it must be, because by definition, there's no interest being paid.
And so that was really the complexity of 87, as we've been looking at this for several years, was we need to have something to help our departments. This is hard for us. It's going to be very hard for departments to comply. So to have a checklist that the auditor said was as clear a guidance as we could give to get down from the 95 pages to here is what we're going to need to disclose.
Can you use an index rate? Can you use a treasury rate that's out there, prime or something, or like a 10-year treasury yield? Is that one of the possibilities?
You can look into it. What the purpose of 87 was that it wanted governments to understand that sometimes a lease may not be the best deal for the government, that you might be able to achieve borrowing in other ways, in a less expensive way. And so it really wanted governments to look at, or to be able to disclose as close as being able to understand what an implicit interest rate was. So that was their intention, but they made it very complicated.
Okay, so I have one other question. When we're the lessor on a piece of property or an improved piece of property, by statute, we don't pay taxes on that, correct? Okay. Do we estimate what the taxes would or should be as we calculate a lease payment for a tenant?
Well, many.
Because also, because especially if you're, mainly if you're leasing it to a for-profit corporation. So if we were to sell that piece of property, then that entity would have to pay real estate taxes on that piece of property. If we lease it upon at some kind of market value that doesn't include the cost of the taxes, then they're getting a very unfair advantage in the leasing of that, because they're not being charged real estate taxes as another similar for-profit corporation would have to pay real estate taxes on. So we need to make, and I've got something in mind very specifically about that question. We have to keep that in mind as we do things, because that's just not fair. And we shouldn't be subsidizing for-profit corporations by allowing them to use our ownership of something where we don't have to pay real estate taxes on.
And certainly that's why many times governments restrict those types of situations to not maybe, or oftentimes it's for nonprofits.
Yeah.
And
but
who.
I've got something specifically in mind on that question, so.
The question that I have is, how does the money change hands?
How do we know how much, the rent on the stuff is? I mean, I don't know that I've ever heard any of that. So when you're talking about interest on it, don't you have to be looking at how much, as I say, how much is being paid? I don't know that, is anybody paying us anything?
What do we have property that we rent to, that we are the lessor?
Exactly.
Yeah, there's a whole bunch of them.
At a million, I mean, I'm looking on this page and we're the lessor on virtually everything. But I don't know that we're getting money from, like, the Williamson County government.
Well, as we look down this list, the lessee, for the most part, not every single one, but of course, these were all done before GASB 87, so we're having to look to comply, but most of these are government-type agencies or nonprofits.
So they don't pay us anything, right?
They don't pay,
They don't pay the city of Franklin anything?
well, I believe you,
That's the amounts over there.
so that's just not what she's looking at.
I'm looking at
Take
that
take
one
the First
page at
Bank as an example. They're for-profit.
They pay us a
Oh, they pay-
annual lease.
Yeah, no, I know, they
Yeah.
would have to pay that.
Yeah, right.
So as an example, how do
much
you
is-
calculate what interest is on that lease payment without having, I mean, it's simple financial thing. If you borrow money, you have a principal value, and then you pay interest on the amount that you borrow. I mean, that's it. If you own a piece of property outright, we didn't borrow money, well, we might have, but it's not a secured credit. In other words,
Correct.
we don't, so we basically own the post office free and clear. Okay, so whatever we get in rent payment is, in normal accounting terms, again, I'm speaking from private sector, not a public sector. Normal accounting terms is just a rent payment, and it's considered revenue. And I'm assuming for the city, it would be considered revenue as well. And now they're asking you to divide revenue between principal revenue and some predetermined interest revenue, right?
Well, we have, for the contracts that are in place that were done before 87, then we're having to comply in a way that is analyzing all these contracts and make it work.
Well, I get that, but let's say we're starting to lease the bank right now. Okay, we don't, that's just a good example. And and let's don't worry about the post office, but that's a for-profit too, I think, so. Anyway, because it's a operational thing. I think that post office is a for-profit post office.
I
But
believe so.
okay, so, but it doesn't, but let's just take First Bank, so we decide to lease it to them, and the market value for a downtown lease space may be, let's pick it up, $20 a square foot, okay? So we know that they could go someplace else, they wanted to lease it from us, we had an empty space, so we lease it for $20 a square foot. That's market value, right? Okay, so that's 100% of that payment is a lease payment. We have no interest being paid. They're paying a lease payment, and I don't know how on earth you could ever, and how the government tells you, how are you going to calculate an interest rate on something that you have no basis in, and, well, you have a basis, but you don't owe anything on it, and all they're doing is making one-time payment. And then the other thing, if it's calculated as interest, then that means the lessee is paying interest on that, correct? If you're receiving it as interest, it has to be interest, right?
Well, we received the rent payment.
Well, but you're now saying part of is rent payment, part of it's interest.
We're saying that GASB 87 makes us disclose, we have to actually disclose whether, if it's, like, it's actually disclosing, in this case, implicit rent or implicit interest rate. That's part of that calculation
Do
to
you
come
show it
up
on your
with.
books as interest?
It would be rental income.
Okay.
It will still be rental income, but for disclosure, we have to also calculate, for. we have
I'm
to
trying to
we
get
have
you
to
in a
do these
bind.
calculations.
That makes,
It doesn't
it
make sense,
financially, and I'm not a financial wizard, but I've had a few financial classes in my, that makes no sense at all. None.
GASB 87 it has changed how government, public finance officials even approach
Well, I believe
leases.
that,
It
but-
has, and it has unfortunately, it has for several years. And because of these types of complexities that do not fit with governmental public finance neatly as they do perhaps in the private sector.
I don't want this to happen, but I'd love to have someone try to explain that in simple terms of how you do that. I don't want you to try. It's not important. I mean, it is, but it makes no sense from a guy who's got I've got an MBA in finance, and so I'm not like I'm dumb about those kind of things. And that's what I do for a living. So anyway, doesn't matter. It's goofy, but.
And so, I mean, I'd even like to know how much money is changing hands on each one of these.
And
You have that probably?
we do have that. Mike had made some notes of what those are, and we can put that into a cleaned up version and get that to you, because we certainly have how much the value of those, the annual amounts of those contracts
Okay.
are.
So when you do a general ledger, I'm assuming you do regular general ledger, so you bring that in as rental income, then what do you do with it from a general ledger standpoint? Do you divide it out? I mean, or you just, so it's off books, the interest is.
It's revenue to whichever appropriate fund that it's to be recorded to. If it's
So it is going to be recorded as
It's
interest then?
revenue.
Revenue.
It's for us. It's in this case, it's a revenue for us. If we
But-
receive a rent payment,
That's but where do you disclose that there's interest anywhere? How do you disclose that? Like I say, so you have to come up with an interest number, but it has to be off books because you've already earned it as revenue.
it's a note to the It's a note to the
It's
financial
a
statements.
note to the financial
Mhm.
statement.
It's a note to the financial
That the
statements.
estimated interest on this particular property could be, or may be, or is estimated to be X, and
And
that's
the-
it. So it's just a subnote to the financial statement.
In that middle section of the big audit report that has
Yeah,
all the notes.
I didn't read that.
It's going to become another note, and it'll be,
Okay.
compliance
All
to
right, okay,
GASB
all right.
87. And we have some similar ones for pension we've added in recent years, and it'll be added as a disclosure in the note section.
You think I know I'm getting off on a tangent, I don't know why I am, but you think a lessee could then, since you're determining that it's interest, you think they could deduct that from their income taxes, from their,
Yeah, see?
If they're for-profit, and then
Uh-huh.
that's an expense, so.
well, but if it was an individual, you're right, it normally would be an expense, but if it were an individual, I don't know if you're leasing
I
to
don't-
any individuals or not.
Primary residence, I can imagine.
I wouldn't think so.
It doesn't matter. I'm sorry. I retract
No,
everything
no,
I said.
no, I know what you're talking
This has been
about.
blowing our mind for years.
So just write that off of say Alderman Shore had no comment.
This will be edited in post-production.
Alderman Shore had no comment.
But Alderman Schroer, I guess a lot of what you're just talking about is what was really some of the biggest fear about the new statement was calculating interest
Sure.
in a lease. And it was one of those where you had this 95, 96-page document, and it was just one. We need to let those that are writing the agreements know what needs to be in there. And with the statement saying there had to be a implicit interest rate, it was just one. That's one of the requirements that's now being put
So-
on the local government.
Okay, so I'm back at, so you could
Yeah.
capitalize your revenue at some number, and then you could figure out that,
Yeah.
and put a value based upon what you're leasing, based upon a
Yeah.
cap rate on your rental income. Then you could take a treasury note of, 3% or 4% and estimate what that interest would be based upon the value of the real estate, and then that would kind of make sense to me.
Yeah.
And so, but you'd have to have a market cap rate on it, on particular projects or whatever it is, because they're different.
Exactly.
But then you could use an interest rate that's out in the public
Yeah.
market, and that would,
Yeah.
that kind of makes sense, I
Yeah,
guess.
and the terminology they use is the lessee's incremental borrowing rate, but that is something that is in this standard and is included in the policy.
Okay, I'm sorry, I'm done.
Yeah. But also, as Christine said, what this does is, just like we have additional reporting for grants and for bonds, this in essence will have increased reporting on leases, which will actually be in your 2022 annual report. And the one thing that you had noticed was about the list of the active leases. That's how we've actually been spending our time here in 2021, trying to determine what those active leases we have. So we have actually come up with a list of 15, and what we're trying to do is, once we have this list, determine which ones are active. Because if you look at the list that's up here on the screen, we actually asked fire department, we said based on the date, it could still be in effect. But they were saying Williamson Medical Center actually doesn't have any equipment at Fire Station 2. So in essence, for us to prepare for this additional reporting, we're actually trying to go through and see what the active leases of the city are.
Well, the sad thing is that accounting is supposed to be black and white,
Yeah.
and as is math, and which is what accounting is, and this is so far from black and white, it's
Yeah.
ridiculous. So, because I never, when I took accounting, they always said your assets, your liabilities have to be equal, and I said, well, I was only off a dime,
I know.
And you'll put that
and
in,
I
won't
got
you?
an F. Now I'm really quiet.
And what we also did before we brought this to you for your recommendation is we actually let our outside auditors see it, and they actually felt that it did follow in accordance with the GASB Statement 87.
Mr. Chairman, I move approval.
Okay. Proper motion, is there a second? Second. Any other questions? I do have one. Lease agreements, why would the Marriott and the conference center not, do we own the conference center, right?
Yes, we do.
So is that not a lease agreement with the Marriott?
It's actually an operating agreement,
Okay,
and so we have an operating agreement that it does not appear falls under 87.
okay. All right, because I was just looking, because there's really, in some of these, there's probably, if we're leasing to the Franklin Cowboys, can't be that, we can't be, what, $1?
It's probably not,
Yeah.
it's probably not much.
And it's 75% interest, and it's a
Yeah.
25% rent.
Right.
That's what that is.
Franklin Cowboys is about $1,800 a year.
So they're paying $1,800 to? I mean, the reason I was saying that is because when we rented that building for the Clay Center, I rented that from the county for $1 a year. Which was I guess now that I think about it, that was a pretty good deal.
You think?
At the time, I didn't think it was worth about 75 cents, but all right, we do have a motion and a second. Let's do a roll call vote. Alderman Speed, how do you vote?
Yes.
Alderman Shore, how do you vote?
Yes.
Alderman Peterson, how do you vote?
Yes.
And the chair votes yes to that. And let's go to the item 4, report of internal control documentation updates.
On this item, we have it listed as a report because last year, the board gave Eric the authority to approve updates to the city's internal control documentation. But what we wanted to do as you are the city's audit committee, we wanted to make sure before we ask for Eric's approval that you were comfortable with the changes we're looking at. So we just wanted to kind of run through those with you just to make sure that it all seemed like that was the direction we wanted to go. Actually, if you think about this documentation, we actually approved it back in 2016, the board did, and there actually was a due date of June of 2016, and the board here in Franklin actually approved it 2 months earlier, so we were actually one of the first ones to actually pass the internal control documentation. And what the documentation really is, it's just all the steps that we take as a city to make sure that everything is accounted for, as well as have best practices to prevent fraud or misuse. We have included a summary of the updates, which is now up on the screen, and I'd like to just kind of go through that list. The first items that we have are simply to update wording and appendices. Some of it is we provide monthly and quarterly reports to this committee, and before it had said upon request, so we just want to make sure the wording was accurate. The second set of items were to update links to web pages. With changes that I guess occur over the years, we just wanted to make sure the most current link was on the web pages. The third set of items were to replace some generic wording that we had used back in 2016. Now that we actually know what the auditors, as part of their review, are going through, we just wanted to make sure our wording matched the steps that they were actually taking when they do the annual audit. So we actually have that wording now in the documentation. Purchasing also asked that procedures for fleet cards and for purchasing cards be added. And the last thing is, because the authority was given to Eric, we added a page where Eric could sign at the end to say that he agreed with the updated changes. So we have actually added that to the end of the documentation. So it's kind of those things that we want to update here in 2021. and that will make it consistent with audit procedures. And also, this documentation doesn't create any policy. It's simply used for audit purposes. So our next steps, if you don't have concerns, we will submit it to law, let them review it, and then we'll ask Eric if he's comfortable signing and approving it. And then upon his approval, it would be on the board agenda as an item on behalf.
Do you need a vote on that?
No vote.
Okay. Any questions? Scott, any questions? Then I would forward it to the appropriate people then. Item 5, financial report for third quarter of FY 2021.
If you look at the quarterly report, there's a very obvious starting point, and it will likely be the high point of the year. But if you look at the surplus in the general fund, it actually is one of those where if the committee thought that it kind of looked, unreal, even as we were putting it together as staff, it looked unreal. Because last year at this point, we were essentially at a break-even position. This year, at the end of the third quarter, having $5 million more in revenue and $5 million less of expenditures, to have at this point in time, it essentially was a perfect storm. Is basically we knew we had grants that came in earlier. We also have had less expenses as we had cost containment from the 2021 budget. We had transfers that we didn't have this year that we did have last year. So in essence, what we did is we actually provided a separate executive summary just to kind of let the committee see how that came about. Because even after the second quarter, it was a surplus of one number, and actually it had increased here in the third quarter. And one of the things that's also in it, business taxes. Last year, the due date had been delayed. This year, it came in on time. So actually, we had $2 million of business tax sooner, which appeared in the third quarter, that we didn't have until later in the previous year. So it's kind of just one of those, we just wanted to kind of go through, do the comparison last year, do the comparison the second quarter. And again, we anticipate this will be the high point of the fiscal year, as there are probably some additional things in the fourth quarter, but it was just one. I just know in preparing the financials, it was just one of those that maybe it wasn't even obvious that we had reached that point until we were compiling the report. So I guess if you look at that, very positive news for the general fund. If you do look, though, back at some of the other things, we do also see that gasoline taxes and hotel motel taxes are still lower, which we've been seeing all fiscal year. So as well as good news, we do know that we have been impacted in those other funds.
Any questions on the financial report for the third quarter?
I don't know whether it's here or whether it's in the next part that you do, but on the little page on the gas tax, it only shows over on the left side, where it's supposed to be the what's happening in previous years. It only shows 2017 and 2018. It didn't show any of the others. I made a note on it, but I've forgotten where it is.
We can check on it.
Yeah, absolutely.
It's just a very small, very,
Yeah.
very small.
Yeah,
We definitely have audited numbers for 19 and 20 on
Yeah.
the gas
Right.
yeah.
In fact, it might even be on the monthly reports, I don't know, but anyway.
Gotcha.
We'll look at that.
Oh, yeah, it was. It was on page 12 in the monthly reports.
Any other questions or comments? If not, Mike, you want to continue with the monthly report?
Yeah. When we look at the monthly reports, if you do look at Schedule 1 and you now have the number for March 2021, and you look back to it being compared to March 2020, when COVID was first declared a pandemic and national emergency. The difference is 31% higher this March versus the previous March. So it's kind of, what we were, wondering what that would look like. So we actually now see that. Come April, the 0.5% that had been previously used by the county to actually pay towards school debt service will actually be returning to the city. So as we finish up, the city had actually had a total of 22 million that was used for school debt service. So, and as we did say in quarterly reports, gasoline tax, hotel motel tax is lower, and that's kind of, what we had been seeing all year. We did see one thing that did change. The conference center had its first gain in the fiscal year of $40,000. So that was actually good news. And the one thing that we had mentioned is we would like to kind of just talk about grants a little bit more. And so if you look at the grants report, we actually kind of updated the format where it's actually divided up by departments. And we did just want to kind of go back and talk about what we saw earlier in the fiscal year when we had the 1.8 million come from the state and there was no spending requirement. When we had the 1.2 million grant, we know that came from the COVID emergency expenses that basically went back to last fiscal year. And something Eric mentioned about on Tuesday, the 4.6 million that has come in from the American Rescue Act, that has actually been received by the city. It's the first half. And as Eric said, we are trying to go through and determine how that can be used. So we actually have receipt of it, but we haven't actually developed the best or developed the use for those funds. So we keep researching and trying to determine that use.
And even the guidance we've gotten on the use of those funds is preliminary. It's still in the federal rulemaking process. So it's been issued, but it's not finalized. It's in a
Exactly.
comment period. And so we're still waiting to see what actually comes out of it. So we're learning things based on what's in there. It still may be subject to change. So we're gonna have to continue to learn and adapt as we get more information.
So you've got a year to spend that?
We have actually till the end of 2024 to spend the federal
Okay.
dollars. We have until the end of June of next year to spend the state money, the 900,000 that we expect to get in July. But that doesn't have really any direct strings attached to it. It's pretty open for us to use how we see fit. So that, we don't anticipate that being a problem. It's more the deciphering the federal guidance and then making the strategic decision about the best place to use it. And so that's what we're going to be working hard on, and TML's looking at it, and the state comptroller's office is looking at it, and lots of folks are looking at it to understand what makes the most sense and what the guidance really entails. If we had our choice, it would have been great to have had it more in a block grant format, but this has come down with pretty significant guidance, and that's what we're trying to decipher.
Any other questions of Mike or Christine or Eric or Michael Walters Young? I see he was sitting, I saw him shaking his head while he was agreeing with something. I'm not sure what it was exactly. But anyway, any questions? If not, the last thing I see on this, well, the next to the last thing is other business. Any other business?
Just if the committee is still inclined to take July as a summer break, then we come back on August 12th, if that is still agreeable to the committee.
I see a head shaking, yes.
You certainly earned it in February, March, and April, so.
Yes. I don't think the committee has any problem in not having a meeting in July and coming back then on August the 12th,
August 12th, sir.
2:00. Okay?
And 2 o'clock too.
Any other questions or comments? If not, I'll entertain a motion to adjourn.
So moved.
Proper motions, or so there was a second. Do a roll call vote. Alderman Peterson, how do you vote?
Yes.
Alderman Shore, how do you vote?
Yes.
Alderman Speedy, how do you vote?
Yes.
And the chair votes yes. So we are adjourned.